financial accountability and reporting group video assignment. To my right is Akila, I'm Jebrial, and to my left is Jennifer.
So we've chosen to do the Thurs group, and the company's history can be traced back to 1881. Thurs operates in the gambling industry and spreads across 2 continents, with 4 brands under our belt. And today we'll be discussing financial information found in the 2016 and 17 annual reports.
Elaborating on what Jennifer just mentioned, in the financial reports, in this presentation we'll be talking about the primary financial and social performance of the company, also discussing the profit and loss, leasing agreements. So what we're doing, we'll be comparing AASB 16 versus AASB 117, and also discussing impairment testing as well.
Thank you for listening, and we hope you enjoy the presentation.
Explain the primary activities of the Thurs group.
The primary activities of the Thurs group consist of lotteries, wagering, gaming, and digital performance.
Can you talk about the financial performance for Thurs?
Sure. There was a slight drop in financial performance from 2016 to 2017 in terms of profit. The profit decreased from 233 million to 220 million. There was some of the highlights from the financial year discrepancies were there was a decrease in 5.9% of revenue from lotteries. There was also a reduction in expenses for lotteries of 5.3%. There was a 6.9% decrease in revenue from wagering. There was also an improvement in gaming financial performance and investing and branding and marketing to improve in risk management for the financial year of 2017.
And can you talk about the social performance?
The social performance of the company includes charitable giving and sponsorships, which increased from the previous financial year, whereas the state and territory government associations with partners and stuff like that has decreased. We are also firm about diversity in the workplace. Women in key management positions has remained relatively consistent throughout all categories. In senior management role, there was 1 employee difference between the financial year of 2016 and 2017. We also conduct internal pay equity audits to make sure that women and men are paid the same. And in 2017, there was we found there was no discrepancy between the pay of men and women. All employees were required to undertake a mandatory diversity training session, which was completed in 2017. As well as employee health and safety issues, the number of incidents that occurred dropped from 57 to 38 from the 2016 to 2017 financial year.
Can you give us a brief overview of the profit and loss with the comprehensive income for the total of 2017 and 16 financial year?
Yeah, definitely. So for the 2017 financial year, we did have a lower level of revenue in comparison to 2016. Therefore, you would normally presume that the 2017 financial year would have a lower amount of profit. However, this wasn't the case. Even with the merger with the Tabcorp, even with the merger with Tabcorp, we did manage to reduce the expenses for 2017 in comparison to 2016 financial year. So at the end, the result was actually $254 million worth of net profit in 2017, compared to the 2016 financial year of $222 million worth of profit.
Was there any differences in the 2016 and 17 financial years?
Yeah, there was a considerable difference. In the 2016 financial year, we did perform really well. Our net revenue for that financial year was $2,950 million. In 2017, it was a bit less. It was $2,798 million, which means there was a difference of about $152 million if you compare the 2 revenues. Now, at the end of that financial year, when we did the expenses and so on, I think we handled the expenses really well. Even with the merger for Tabcorp, we managed to reduce down the expenses for 2017 to maximize the level of the amount of profit. Now we've got it down to, for 2017 it was $254 million in comparison to 2016 financial year of $222 million. So there's a $32 million difference there.
Are these due to extraordinary or recurring events?
Well, the difference between 2016 and 17 financial year was due to the merge with Tabcorp. There was about $32 million that was a difference. If we didn't have to bear that expense, I believe the net profit would have been pretty close with the 2016, but because there was that expense, there was a large difference between net profit of 2016 and 17 financial year. Can you explain to us how the Australian accounting standard AASB 117 will impact your company's reporting for liabilities?
Yep, so with the new standard being introduced, the lease expense recognition is changed. So all leases other than short-term and low-value leases will be disclosed on the balance sheet. The changed disclosure requirements will mean that lease liabilities and interest expenses are front-loaded rather than the current straight-line method being used. So that means that liabilities in the form of amount owing and initial payments are initially high but will gradually lower.
How will the new standard affect the reporting of your assets and profit?
So for the recognition of assets, the Australian Accounting Standards Board states that the lessee will choose to measure the asset either at the discounted carrying amount or an equal amount to the lease liability adjusted by prepaid or accrued payments. Therefore, profits are significantly lower overall because of the lease liability being disclosed in financial statements.
How does the Tats Group carry out their impairment tests?
Yeah, so goodwill and intangible assets that have an indefinite useful life are not subject to amortization, but they are tested every 6 months for impairment. What we do is we calculate the recoverable amount, which is the higher amount in comparison to the asset to fair value, less the cost of the dispersal and the value in use.
Can you explain what the cash generating units are?
Yeah, definitely. So the cash generating unit is a small group of assets that independently generate cash into the business. These cash flows are quite independent from other cash flows that are generated through other assets. For example, in our company, the company calculates the carrying amount of the asset, and what we do is we compare it to the recoverable amount of the asset and utilize the lower amount of the two for reporting in the financial reports. For the purpose of asset impairment, assets are grouped into the lowest levels for which there are separately identifiable cash inflows, and this is called the cash generating units. Just a side note as well, non-financial assets other than goodwill that suffered an impairment throughout the financial year, what we do is we will review them at the end of the financial year to see if there was an actual loss, and if there wasn't, what we do is we do a reversal on the impairment loss that was incurred or reported in that financial period.
Can you give me examples of cash generating units in your company?
Yeah, definitely. So with the Tats Group, we've got lotteries, we've got wagering, we've also got Max and Maxsec as being the cash generating units.